The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 82. You got the Nasdaq up 33. S&Ps are up 6. Gold contracts trading down $13 at $13.31. We have silver off 27 cents at $19.32. Platinum is down $9 at $1,030. Notes, the 10-year note up 5 ticks, 131.15. 30-year bond up 25 ticks, 169.01. And good old King Dollar up a couple hundred ticks, 95.40. We get volatility. Market moves down yesterday, moves up. As the debate starts last night.
We all survived the debate. It's a positive market. We're back to a positive market.
Yeah.
Why not, right?
And as the debate was going on, folks, the futures were actually moving up.
They were. Whether that was Asia or what was going on, right? But they were going straight up.
It was hilarious.
Nice 45-degree angle.
I had the futures on one side and the TV up on the other. Really, and what we did, and then we go down all since midnight last night, folks, and we just did a snapback right up to where we were last night.
Yeah,
you have to love it. Let's go to our man, Mr. Kevin Hinks from TD Ameritrade Thinkorswim. Now, every trading day right here at TFNN, folks, 12 to 1 Eastern Standard Time. Kevin and Scott have an amazing show. You want to know anything and everything about the option market, folks? Swim lessons right here at TFNN. If you happen to be in your car, the beautiful West Coast right now, go to work in the morning. Remember that you can get us 24 hours a day right on your cell phone. You go to TFNN.com, you hit Tiger TV, and have a great show. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. How's everybody doing?
Hey, we're alive and kicking, man. It's a beautiful thing. The world didn't end.
Tom and Tommy, I need some guidance.
Oh, boy.
Yeah.
Okay? I have questions, and I need answers.
Don't we all, but go ahead, yeah.
What? If you're listening to the debate last night and you're trading futures, what were you trading? What were you thinking, buying or selling futures based on what's going on in the debate? What is your motivation?
Listen, Kevin. I had the screens up and I had the futures up, right? And I'm saying to myself, and what happened, folks? Just when futures just started, you know, they were like flat. Then it went up like 1 point, and then like 2 points. And I'm listening to the answers and the questions. But well, now why are these even going up? Why, you know?
Yeah.
But I wanted to see it.
For sure.
You know what I mean?
Sure.
Because I wanted to see it, then I wanted to, and like even right now, I want to know. Okay, what are the reactions?
Now it could be that it could have been so much worse. I mean, we all know that it could have been so much worse in terms of just like debacle. To put it
But I mean, guys, here's my point, and I said this at the beginning of Swim Lessons yesterday. All the headlines yesterday morning were market down due to debate and the OPEC meeting. I'm like, that's not why the market was down.
Right, we know that. Right,
it's a nice
headline,
though.
Because Germany was down 2%, which filtered into our futures, which filtered into our market.
Big time.
What does that have to do with the debate?
No,
sure.
It wasn't even close. That DAX. And, you know, Deutsche Bank was a big number. I mean, that dragged everything down, period. Yeah.
And how could anyone seriously write a headline that said we were down because of the debate? Or why did we rally because of the debate? I just don't get it.
And that's why, folks, you want to listen to TFNN. You want to listen to Kevin and Scott. It's so true, Kevin. I mean, that's because the reality is that it's a news deliverer versus someone that is actually trading out here every day. So it's a different ball game. Do you know what I mean?
Yeah. Right.
And you know, it's how it is.
Craziness.
For sure.
No doubt. So what are we going to talk about today?
We're going to talk about double calendars and how to talk about range-bound trades in a low volatility environment, which, you know, Friday afternoon up until Monday morning, we were back in a low volatility environment. We had a little bounce since then.
Yeah.
But we're still going to talk about educating our listeners on how to trade calendar family, diagonal family, anything in the long Vega family of trading.
Nice. Well,
Yeah.
and you know, the way this market is too, man, I wouldn't doubt, one of our talk hosts says, and it's so fundamentally sound that, hey, listen, what the Fed's trying to do is just keep this market flat, up and down, as long as they can, so these valuations can catch up with the market. You know what I mean? And it's like,
Yeah, I think it's amazing, Tom, how many Fed speakers are working the pavement.
don't
this
they?
week.
Seriously.
Oh my God, they are busy.
They are busy, man, and it's almost like they divvy them up, like a little team, saying, okay, this is your job the next 3 weeks, this is your job the next 2 weeks. Let's keep them balanced.
I'm sure they have a strategy, right?
They might.
It's like they put the names in a hat. All right, I've got to go to the West Coast and I've got to talk dovish.
Yes.
Okay. You got to go to the East Coast. You got to talk hawkish.
Right.
And it's like they spread them out.
Right. And
It's
because
amazing.
and what that does, folks, it flatten out the market, and then
Right.
people will just get fed up going one way or the other. I mean, that's I've seen it happen before. They say, you know what, leave me alone. I'm gonna go take a break.
Exactly.
You know what I mean? It's
The
like-
noise.
Yeah.
You gotta not listen to the noise.
No, there's no doubt. So listen, folks, come over to our website at TFNN. If you haven't test drove the TD Ameritrade Thinkorswim platform, it's a great platform. You can hit the banner. You can bring up the platform. They'll put paper money into your account. And, of course, don't forget, right here, 12 o'clock today. TFNN.
There you go.
Tiger TV. Our man Kevin Hinks, Scott Connor. Kevin, have a great one, a safe one, man.
Always a pleasure, guys. Thanks for having me.
Absolutely. Look forward to the show at 12. Stay right there, folks. Tommy and I are coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials right now up 77. You get the Nasdaq up 31. S&Ps are up 6.5. If we go inside the Dow Industrials, we take a look at the strength versus the weakness. Let's see. So you get Big Blue. IBM is the leader out here in the Dow. That's up 1.4%. American Express is up 1.2. Home Depot is up 1. Nike is up 1. Let me see if I believe Nike comes out with numbers after the close today.
Yep.
Yeah, 4:15. Okay. It's going to be interesting.
They usually have been doing well with their numbers, haven't they?
They have.
Yeah.
They have. And that's what's so intriguing. Now, it looks to me that this wants to go a little bit lower. And this is going to be a big one this afternoon because if Nike, I mean, look at the
chart.
Huge chart, okay? Went from $11 up to what? 68.50,
Yeah.
68.05.
$70, yeah.
And they do make so much money, and they do so well. So I'm looking at this. It has a high volume swing low, like from 4 weeks ago, 4 months ago.
Yeah.
And it's like, okay, if Nike, folks, comes out with good numbers and goes down, or I just wouldn't. If Nike is down, period,
They have trouble.
yeah, that's like, okay, what's the rest of the market going to do? Because these guys make money hand over fist.
I wonder if that has to do with, the retail aspect.
It does.
I'm sure plenty of Nikes get sold in malls, right?
And get sold, and Sports Authority went bankrupt.
Right.
Another big
It's
story.
tough, right? No matter who you're talking about.
Exactly.
Nikes are sold almost everywhere, right?
Right.
So if the whole retail sector is struggling in terms of
Right.
in-stores,
Right, because every store makes you more money, even if it's 2 pairs of shoes, right?
no matter what it is, right?
Taken away from the Dow Industrials, you get United Health. It's hardly down anything.
Yeah, they're nothing really.
There's even Exxon's down 13 cents. Inside the NDX 100, what we have strength out here is Apple. It's up 2.5.
No, American Airlines.
Oh, thank you.
I think Apple's like flat today.
American Airlines is up 2.5%. Expedia is up 2.5%. Oh, someone must have come out with numbers. NCLH, that's Norwegian Cruise Lines, up 2.5%, and T is up 2.5%. Taken away from it is Gilead down 1.4%. Amgen's down 1.2%. Vertex is down 9. What is it? 9
cents.
9 cents.
Like 0.97.
Yeah. And since the two leaders are out there inside the IBB, yeah, look at it, the IBB is actually up 1. The Nasdaq's going to be the number out here today. Keeping your eye on that Nasdaq. It looks to me like we already just finished the counter trend bounce. So look at this is going to be crazy, man. If we take a look at the MQZ6.
Quite a little bounce.
Quite a bounce. It tests the highs. So the high of last night was, looks like it's 48, 46.
Yes.
And we just hit 48.
50. We're at a high of.
Yeah. And we'll see if that's just a test. That's going to be really weird if that. I mean, talk about volatility. That's crazy.
Yeah, I mean, that's a big move. That's
a huge, yeah.
I mean, that's almost a 1% move.
And 10 and 20 minutes, right?
Yeah.
20 minutes. The
and oil's having problems today as well.
Yeah,
down over $1.
The oil
inventory tomorrow.
Inventory tomorrow. They're all in Algiers right now, I guess. I saw. Look at that. So in the last 3 days, folks, on Friday it goes down 1.5 points. Yesterday it goes up 1.5 points, and today it's down
$1.50.
$1. Yeah. Jesus.
Yeah.
Seriously.
Big moves in oil.
877-927-6648. And, we'll see how this gold contract shoots out because it's definitely, it's got some selling pressure underneath it. Oh, look, we got our man. It's a beautiful thing. Let's go to Tom in Plymouth. Hey, Tom, what's going on, brother?
Hey, good morning, Tom and Tommy.
How you doing,
Tom.
man?
I'm doing pretty well, thanks.
Yeah.
I sold half of it yesterday. I got a little nervous. I didn't want to carry it with the debate going on. I didn't know what it was going to really do. So I kept half of it, and I was pretty happy with that this morning when I woke up.
Let's take a look at it. What he's talking about, folks, is the JDST, which is the Direction 300% Junior Gold Miners Index. So Tom loves to trade both sides of this, whether it's a bearish or bullish run. And what you have out here today is going to get kind of intriguing, and this is what it is. So the gold, if we go over to the gold contract first, gold, the actual physical metal is starting to give it up, folks, okay? That being said, GDXJ, what I'm going to do is just go to the GDXJ. So the GDXJ is what the JDST trades off of, okay? And what you're going to see is this, is that, it's getting to the bottom of its consolidation. The GDXJ couldn't take out its swing high last week. And this is going to be an area, Tom, that you're really going to watch it like a hawk, man, because I've seen this plenty of times that it looks to me that they do want to go lower, right? But you can see the volume contracting right now. And it's like, okay, are you going to build a little more cars here just to blow out the low? I would be in that camp right now. And the reason I'm in that camp right now is that for the folks that get the gold report, they know that my take, folks, is that the actual physical metal is going to catch up with the equities. That's what seems to happen when this gets out of whack. But right now, it's dicey, man. You know what I mean? Right now, it's like, okay, is this the end of the correction? And, we're going to go. What I would do, which I do a lot, I just go through a lot of these equities, man. Do you know what I mean? It's like,
Heckler and BTG.
And put them all up. And what you do, what I do there, you just got to wait, because if they don't hold price, what happens, what seems to happen with the gold market is that all of a sudden it drops out of, No, I would say if it doesn't hold price, meaning that if we stay at these lows and even the volume's kind of low, but it's hanging right at the lows, I'd stay right there, because the gold market builds, and then all of a sudden it like drops out of nowhere. Like, what the heck just happened? So.
Yeah, if you're not in, you're not going to be able to catch it. That's the thing.
Right, and that dollar, the dollar is saying the physical gold wants to go lower. The dollar is keeping pressure on the market itself. So.
I keep waiting for that dollar to move. It doesn't want to budge.
It doesn't either. No, listen. It's it's all. And even though, folks, the dollar's up 300 ticks right now, but it still needs a lot more movement than that to get off of where we're talking about. Meaning, it's really been a sideways movement. It has rejected lower price, but it certainly hasn't had a nice sign of strength for about a week and a half. You know what I mean?
We need buyers. Yeah.
Yeah, we need buyers, man. So, hey, listen, do you dream of the JDST at night or what?
I think it's embedded in my forehead.
I think it is too, man. I think it is, man. And there's nothing wrong with it. It's all right with it. There's no doubt, man.
I don't want to get attached to it, because I'm looking to really get in the J-Nug and the Nugget. That's really what I want to get into.
No, I agree. The cool thing is that the instruments themselves are great, because when you trade to both sides, that's where it's at.
Definitely.
Yeah.
Okay, Tom.
Right, well, thanks for the advice.
Have a great one, man. Have a safe one. You stay right there. Tommy and I are coming right back, folks. Down right now, up 82. Nasdaq's up 31. S&P's up 6.5. We're going to be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow right now up 79. You get the NASDAQ up 28. S&Ps are up 5.5. If we go over and we take a look at Europe right now, you have Europe, the FTSE's down 0.2. DAX is down 0.5. If we go inside the DAX and go take a look at Deutsche Bank, there it is right now. So Deutsche Bank hit a low today of $10 and 10.18 euros.
Yes.
And thus far as rejected price. When I did this ABC down, the ABC down was 9 something.
Okay.
So this is going to be, we'll see whether the Deutsche Bank can get back inside, it'd have to get back inside 1106. You know, in order to basically have a chance to stay at a higher price. Let's put it that way. If we do look at the DAX, what you're going to see, now I won't get the volume on the DAX until later today to see how it hit the swing point. But the swing point was coming into it had a heck of an amount of volume, so you could expect a bounce. It was the DAX, that was 214 million, which that doesn't seem like a lot for us, but over there that's a lot of volume.
Yeah, you can see just on the chart
it sticks
for
out.
sure.
Yeah, totally. So we have 2 more debates.
Planned.
Oh, that's funny.
Yeah.
Let's see what.
I think they're a couple weeks away, and then there's a vice presidential debate that they fit in between. Then
okay.
They went over it last night. So I think vice presidential might be like October 4th, and then the next presidential is the week after that. I think. Yeah, we'll see what happens.
We had window dressing that start at the end of this week.
And then it's really gonna be wild though, and the actual election's gonna be here before we know it.
Before we know it.
Yeah.
Yeah. And
that will have. You want to talk about watching the futures.
Yeah.
That night.
Right. And then break. Yeah, we get a good 6 weeks. I mean, because that's all it is too, right? Yeah.
It is, right. That's what I mean. You know, it's like, so, yeah, by the time we have the next presidential debate, we'll actually be like literally a month out. And we all know how fast a month goes by. Yeah.
My God.
2 seconds.
Pretty intense. 877-927-6648. Let's go over and take a look at the XLF and the XLE. So the banks were getting hit yesterday. And they still can't catch a bid. This is interesting. So the XLF, that got back inside its lower range. You know, and the volume, yourself yesterday in the market was really light, folks, but yet the XLF, 54 million versus 61. Well, it's kind of light too, but slight pickup compared to the rest of the market. This morning, what you're seeing is that the XLF can't catch a bid. If we go, now, what's happening with our banks, I don't think this has much to do with Deutsche Bank as to do with the Federal Reserve is now looking to put, it's not more regulations, that they're reading the regulations differently, that the banks are going to need more capitalization in order to not stay in business, because they're not going to be able to put them out of business.
To meet regulation, to meet requirements.
Right.
Reserve requirements.
So that would mean that they have to, they're not going to be able to use
leverage.
Use leverage. Now, what also is on the table? Now, this has been on the table for a long time, but this is going into effect. And for all you commodity traders out here, you're going to love this actually, because what had happened is that Morgan Stanley and Goldman in particular, they got huge in trading physical commodities.
Okay.
They bought the warehouses, they bought the tankers, they bought everything.
Yes.
And under Dodd-Frank now, you can't do that.
Okay.
Well, they have to pull it back dramatically. If they want to do it, they have to put up so much money now that it makes it unprofitable for them. And there was always it'd be a theory out there that because they had so much control over those markets, that they knew where everything was. They'd put tankers out all across the Gulf of Mexico, and then they're trading the oil markets, and you're their customer.
You're manipulating
exactly
the actual supply,
the true supply, and
therefore the demand as well.
Right, and we can talk to Andy because
I'm sure
he knew this. That's what a couple of companies years ago. That's how they got so big.
Yeah, and once you get to a certain point, it's
great.
It's no good for the market, right? It's great for that company.
It's great
for sure.
Owning the physical.
It's a great business plan. It's almost like if you can become a monopoly, that's great too, right?
Yeah,
we see that with the Hard Rock casinos around here. But
right. Okay, so listen to this, folks. The Hard Rock Casino makes so much money here; it's amazing. Anyway,
yeah, they just keep growing and growing and growing here and in the other side of Florida.
Yes. Monster. Okay,
yeah.
But check it out. They built a new parking lot, right? And now, is it $15 to park?
$10 to park.
It's like something outrageous. And you should see how big the parking lot is.
Only in a real monopoly does a casino not even let you park and before you pay him $10. Think about that, And then, they're saying you can only come gamble if you pay us $10. That's how much business they have.
And the stories, folks, are horrible. Because the stories are, these people, get their Social Security check, right? And these people coming out saying, I can't afford $10, and it's like, I feel so bad, but I know so many.
It's a tough deal anyway in terms of the people gambling.
I grew up with so many. I mean, and it's not. I'm not saying something bad about that, but it's terrible that.
Oh, people spend way too much money there that don't have the money to spend.
Right,
for
and then
sure.
it's $10 on top of.
And then they jacked it up to $10 a park. Yeah,
and so they were interviewing these people coming out saying, "I can't afford another $10." I'm saying myself.
I know that's a different story though, right?
It is. But it's
sad for sure.
It's disgusting
for sure. You shouldn't be there obviously if you can't afford $10 parking. But the really, it's just that. Casinos and, just to everybody, there's drinks you have to pay for, which just is a different deal from Vegas. You see, Vegas, all they want you to do is come into their casino because running a casino is a great deal because you take people's money in the long run when they play your games.
Right.
But here, they won't even let you park until you pay them $10 to go inside.
They take your money.
Yeah, right. And drinks are like expensive club-style prices where, you're paying up.
Isn't that crazy?
It is.
That's pretty wild, man. Okay, so let's see what we got here. Oh my God, we blinked, Tom.
I know.
So
40
watch
points
this,
in the
folks.
Dow.
We just blinked, and the Dow just came down $40, and the S&P's just came down 4 points. Okay, let's see what's going on. That means, folks, that we have some sellers out here, and those sellers are not you and I, because to move the futures market that quick, you have someone that is pushing some real juice behind this thing. Yeah, we'll see where it shakes out. Bottom line, the NQs are the biggest ones I keep my eye on today because the NQs, folks, broke out, had every right to go a lot higher, and the number there is. The
high is 48.29.
Okay, that's the number I'd be looking for. You got to close underneath it because if you get above it, then that thing is, it's like. Hey,
and we're above it right now.
Yeah, we are.
We're like 10 points above it.
Yeah. I would be saying that, guess what? I want to go higher.
Yeah. Because the NASDAQ hasn't pulled back as far as the other indices.
No, not even.
I'm talking about even like the last 5 minutes as you put up the chart.
Yes, no, I'm with you there. So, and what has happened is that, and it makes sense. So the dollar strength is going to hit the Dow Industrials quicker and the S&Ps because they're bigger international companies. You know, so that dollar strength would definitely hit them quicker. You know, we'll see valuation-wise. It doesn't take much once the NDX or the NASDAQ starts going south, though.
Yeah, things can accelerate.
That thing is vicious, man. I'm, you know, if you've ever traded the NQs, folks, okay, it blows your mind that, like, even going up or down, like, you blink and they're up 20 points or down 20 points.
That's a point, yeah, 0.5% move.
You stay right there. Tommy and I are coming right back, folks. Dow's up 42, NASDAQ's up 23, S&P's are up 2.5. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 43. You get the NASDAQ up 21. S&Ps are up 2.5. Let's go to Lou in Nashville. Hey, Lou, what's going on?
Hey, what's happening, Tom?
How you doing?
Hey, Lou. Good morning.
How's the fall coming into Nashua?
Pretty mild.
Okay,
Pretty mild.
Cool.
Yeah, it's not bad at all.
What are we going to look at today?
Buying SPXS.
Let's take a look at it. So SPXX, folks, is the Direction Daily S&P 500 bear, 3 times inverse correlation of the S&P large cap index. So if we take a look at this, I'm just going to go over to the SPY first. So we take a look at it. The SPY bottom line, you're up 29 cents right now. It couldn't make it above the September 9th downdraft. We tested that last week. You tested that with 76 million versus, and this is intense, versus 221 million. So we go back over to the SPXS. To me, right now, that we take a look at just that direct correlation, I like the trade. The high from last week was, we're 12.59 right now. That was 13.26. It's a high volume high, and I'd say that, it can go after that. Now, remember that these leveraged positions, 3 times leveraged positions, they're daily investment vehicles.
Right.
But I like the trade, I particularly like the trade because what you have out here today, which is pretty cool, is that you can put the stop right under the low of today. You know what I'm saying? What happened, folks, is that, the market was down pretty good, made a whole counter trend bounce on the way back, and I would put my stop right under the low, which in this case is only, you're talking what, it's 11 cents.
12.48.
Right. So the risk versus the reward is pretty good there to me.
If it goes below there, you got to be a little worried, right? So why not just keep it tight?
Yeah, and why not? There's not a lot of times that you can use 12, 14, 15 cents on a stop.
Triple,
and
right?
a triple.
For
You know
sure.
what I mean?
Right.
So, because my take, Lou, would be that we had the test. Because what we did, folks, is that we tested the highs of last night about, 20 minutes ago. So if they go up there again, guess what? They can go to a high. So it's like, hey, your risk versus reward is setting up really nice there, man. And the dollar continues to go higher. The dollar was just up 300 ticks. Now it's up 345 ticks. And my take is the dollar is what's putting the pressure on these markets in general. So.
Right. Okay, we'll give it a stab.
Okay, brother.
Okay, thanks, Tom.
Have a great one, man. Have a safe one. Yeah, the volatility is going to just continue out here.
It is, 40-point down moves in 5 minutes. That'll keep everyone attentive.
Bonus?
For sure.
That's where volatility comes in great, folks, because if you set up large trading ranges, bottom line is, you're not going to get the top at the bottom, but if you get close to either one of them, you can put your stop on the other side whether you're bullish or bearish.
Sure.
And, what does happen in markets like these, we can bounce around. If you can bounce around in like 7 to 10 S&P points all day long, if you're really trading, you can make a...
that's big. Because that's a 0.5% move.
It's big. And guess what? 5 points up, 5 points down, 5 points up. But that's where it's important, too, that you have the stops in, because if you bring the stops up and then bring them down, you're stopping yourself up, but you're doing all right.
Right.
Yeah.
Yeah. Right.
It's
part of the plan.
It's part of the plan. And in fact, you don't know whether you're in one of those markets until you're in one for about a good hour and a half or 2 hours either. Do you know what I mean? It's like, okay. We go over to the XAU now. The XAU and the HUI, they're getting a little more pressure right now as we're moving into the trading day. And this is still early. They're going to go after the lows right now. The low and the XAU out here was 94.45. No, 92.65, and we're at 92.85. If we look at the gold bugs index, the HUI, the low of today is 228.59, and right now we're at 230.81. So the gold bugs index is stronger than the Philadelphia Gold and Silver Exchange. That's how this is shaking out right now. There's slightly more pressure on the actual physical gold, nothing heavy though. $14 is not the end of the world, because even when you look percentage-wise, the big percentage mover is crude oil.
Yeah.
Crude's down 2.9%. You get the gasoline off almost 2%. Heating oil is down 2.7%. It's interesting.
Yeah. Silver and gold too, thrown in there.
All right, silver's down 1.5 and gold is 1. Yeah. So for all the folks up north, the heating oil, that gets cheap. Fill up those 200-gallon tanks.
Yeah, because unfortunately October's coming and November's coming. And
Right. What's so wild is that I remember having an oil tank, and that's I guess at these prices here, it's not as expensive as they used to be. No, let's see. It's,
Well, just put. I mean, a gallon of gas makes it relatable. It's
yeah,
like
it does.
$2.50, so it's a little bit more expensive,
so
probably. Than
maybe
where-
like $3. Yeah, that's still $3. I guess that's $600 for fill up for a 200-gallon thing. So I guess that's relative. Meaning, what I'm saying is that years ago, I'd have to pay like $150, and I thought that was expensive. But I'm going back 30 years or something. You know what I mean? But that was like, wow, man. Now that's everyone would love to pay that,
the
right?
exchange, right? For sure.
Exchange, no doubt about it. Volume-wise, let's take a look at the volumes out here, because what you did have yesterday was light volume. Today is 200 million, which is also light volume.
Especially with the moves you already had.
Yeah, totally. And the NASDAQ is still saying it's light. That NASDAQ, that's a little big. Except that L's telling me that as to this day, this is still the lightest at this point. That's what's pretty cool about it. What happens is that when you see the L beside my number, folks, that doesn't mean it's going to be the lightest of the day. It means that from thus far this year, at this time of day, that's the lightest. That's what that means.
We'll have to look into that.
At 10:49.
We'll have to look into that.
You
I don't think that's true.
Oh, why?
Because it's constantly
Because it's there
showing
every
an
day?
L. I mean, let's get what that really means. But
Okay.
That's all right.
Okay. We'll do that. No, listen, I know.
That would mean every single day we're setting a new low when we pull it up.
Well, the changes during the day.
I hear you.
Yeah,
We'll just figure out what it
that's what has happened. That's where I'm going with that.
Sure.
Because believe me, I thought the same thing. Like, man, this is insane. This thing is up there every day. One of the Tigers want to look at the XLE. So the XLE, I think this looks to me like, well, first off, you're at $66.35, and I'd say that, yeah, your high volume swing low out here from August 2nd is game. That's 64.57, and that's a heads up for the S&P itself, because that's Exxon, that's Chevron. That's some heavy.
Definitely.
Yeah.
And that's, like we said, oil's down a big number right now for sure.
And yeah, you get Exxon down 50 cents. Exxon's building cause to, right now you've done 100% move of a move in 6 months. But that looks to me like you're building cause for lower price. 877.
I was just going to say, it doesn't look too strong, does it?
No. It's so wild when you hear like a company like Exxon. If that doesn't look strong, it's like, oh really?
Yeah. And they'll be around, but
they'll be
just
around
not making money like they want to from that.
Exactly. We have the Dow up 43, Nasdaq's up 22, S&Ps are up 2. We're going to be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. And don't forget, folks, Monday, Wednesday, Friday, we do live programming from 8 o'clock in the morning to 5 in the afternoon. Tuesday, Thursday, 7 o'clock in the morning to 6 in the afternoon. On all that programming, get right on your cell phone. Just go to TFNN.com, you hit Tiger TV, you're going to get some great programming. Got our man, Mr. Basil Chapman, coming up next. Then, of course, we're going to Swim Lessons, TD Ameritrade, Steve Rhodes, Dave White, myself, our man, Mr. Andy Heck, is going to be growling prowling with us in the afternoon. And, when we talk about John Logan, he kicks us off every trading day at 8 o'clock in the morning. And if you come over to our website, what you're going to see, if you are familiar with the TAS profiles, bottom line is that we have TradeSoft trade signals with auto execution. So this is a between TradeSoft, DJ&J, trading automated signals. It's a future account, folks. You can check it out on the front page of TFNN. We'll be talking about it a little bit more.
Yeah, I saw you talking to him last night on your show. That was good. And so John put together quite a signal, generating system. Yeah. And he's got it hooked up with DJ&J and our man Jeff Sabbath, and I'm sure you'll have Jeff's on soon as well. And yeah, we're excited to do it and see where we go.
Yeah, you gotta love it. And this type of market. So what is really cool is, even when I was listening to John this morning, one of the signals had fired off, and it was really wild. They caught the gold move on the way down, and they already closed it.
Yeah, I get them on my cell phone too.
Because I was looking at it, I was up. I said, "Whoa, okay,"
Yeah.
Meaning that it was so close. The context was so close. What happened, folks, is that gold was doing fine, and then all of a sudden it just popped down $12 like in a heartbeat.
Nice.
And then it went back up. It was down only 6. Then it took a while to get it down 10, but they already covered it. I mean,
cool.
But it's like, okay, man, these profiles are a chirp when they hit like anything else.
Sure.
You stay right there, folks. Our man, Mr. Basil Chapman's going to be coming up next, and of course,
how about rates? Can we look at rates?
Oh, yeah.
Quick? Just with a 30-year up a full point.
We so right now you get the 10 years at 1.56. Go get those mortgages.
Right.
Yeah, I mean, isn't that interesting?
Right.
It is. And for all of us, I think that the market is not scared wouldn't be the right word. It will take conniptions with higher rates.
Yes, definitely.
Yeah.
They're worried.
Right.
A little hesitant to accept that reality.
Right. And, every time I spin it in my own head, I'm saying to myself, you know what? The Fed wants to go up. The market wants to go up. But as it pushes higher rates and the market goes lower, so they're like, oh, no, we can't go up. We can't go up, man.
Yeah, I know. And you're like, the market wants to go up. I don't know if the market wants to go up.
Yeah, no,
the Fed wants to go up. I don't know if the market wants to go up.
Well, what I mean by that is that, to me, the way the 10 and the 30, have been trading, it's like, okay, you're trying to go up versus down, but this counter trend bounce is pretty good. Yeah. Yesterday it had some good price. Today it looks like it's almost failed a couple times. We'll see where that shakes out. But
yeah,
rates mean a lot. There's no doubt.
That's for sure.
No doubt.
Especially when they've been at zero forever.
Oh my God! Seriously, what are you going to do? What are you going to do, right? And look at, as we're talking, we better stop talking for these bulls, Tom. Now the Dow just gave it up another 20 points. Right. And so we have the S&Ps coming
more
flat.
points and we're flat, yeah.
And
the S&Ps are flat right now.
Yeah. And so the NQs, and that's the thing, you get another failure out here inside these NQs. I think they need a few more points. What do we say, 28? 48, 29? What is that right there?
48.29.
Yeah, they're at 48.34. You stay right there, folks. I'm Mr. Basil Chapman's coming up next. By the time he comes up, we'll probably have red markets. Dow's up 24, Nasdaq's up 18. Thanks, pal.
Thanks, man.
Have a great one, folks. Have a safe one. Look forward to speaking to you this afternoon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.